The outbreak of COVID-19 has had an extraordinary impact on the global economy and triggered widespread social upheaval. Worldwide, clients, investors, analysts, market watchers, and citizens are grappling with uncertainty and in need of insight to guide their decision-making. Starting this week, the Aga Khan Economic Planning Board for the United Kingdom is launching a series of pre-recorded webinars, Managing Through Disruption. Designed to help answer the questions that matter, we discuss the impact that COVID-19 has had on Jamaati businesses, self-employed, and landlords. Jamaati members share their experiences and their unique perspectives on the outbreak's effects and how they are repositioning their businesses for the future. These recordings are available on the.ismaili. You are watching Managing Through Disruption, Accessing Government Support. On the panel, we have Al Malik, Managing Director of Remarkable Hotels UK Limited and Chairman of Oksana Hospitality. Jamil Mauji, Co-Chair of National Care Group, an adult specialist care provider. Fareen Meghani, FCA, Partner at Fairman Harris Chartered Accountants. Amin Mirali, Director, Retail and Hospitality, Treats Foods Limited. This session is moderated by Hussein Sundaji, EPB Board Member, responsible for alliances.
So the flow chart basically shows the support that's available currently by the government, and it's correct as at early April, and obviously this is changing dramatically day by day. So you start in the centre point at the COVID-19 support, and there's a general area which talks through the main support being given by the government to any business that's impacted by coronavirus, which is the grants, time to pay arrangements, so delays in paying your tax, the coronavirus business interruption loan scheme, and specific support that's being given to the retail, hospitality and leisure sector, being that they've been the most impacted. You've then got areas that split out. So if you are a VAT registered business, then to make you aware that part of the MTD portal has been delayed, although most people are already onto this, and that you can defer your VAT for quarters ending up to the 30th of June until the 31st of March 2021. If you are self-employed, then you can defer your July payment on account and make it in January. It obviously creates a cash flow issue in January, but gives you a bit of cash flow now. We're still waiting on full guidance on who exactly this applies to, if it applies if you have rental portfolios. At the moment, we're being told it's only if you are considered self-employed. So that's something we're hoping for further guidance on.
Yes, we did. We furloughed all our staff. I know that some hotels did keep some skeleton staff in place, but we decided to furlough them all. We furloughed them all at different stages. So as soon as this happened, we started cutting down staff from 0-hour contracts straight away, and we reduced that. And so some were furloughed around the 15th of March, and then the others were furloughed around the 24th of March when we were directed by the government to completely close the hotel. We firstly needed to understand what furlough actually meant, because we hadn't really used this term before. I don't know if it's more of an American term or not, but there was a lot of confusion over the definition, and so we approached the HR company that we used, who then gave us some more direction and asked us to use a change of status letter with all our employees. And then there was so little information that was out there at the time, so we had to just wait and see what was happening with it when we had further information that was given by the government from the HMRC portal. It was difficult to decide who to furlough and who not to furlough, because you have to be very careful, because you could have a discrimination case against you if you decided to furlough some people that were on the same contractual terms as others. You had to be wary of people that were on maternity leave. If their pay had already been determined, then you couldn't change that. That had been decided. But if somebody had sort of extended contractual terms, then you could furlough them and offer them better benefits. So that's the sort of stuff that we were looking at.
And Farin, could you kind of update us on where the HMRC is on getting the portal ready for employers to claim the pay they're owed? I know there's a lot of concern that people get that cash in before they have to make April payroll for the furloughed staff in March. Could you give us a brief update on that?
Yeah, so the system went live to some employers this week, so around the 8th of 9th of April, sorry. And they've been testing it out this week. They expect that the system will go fully live on the 20th, with the expectation that payments will be made by the 30th of April. So we do expect that payments should hit client bank accounts in time to make the April payroll, which will considerably help cash flow.
Do you think and I know it's difficult, you're not HMRC, but would you advise business owners to make sure they have enough cash reserves available to make April payroll in case they're not funded in time?
Yeah, so historically, when HMRC have had a new system come up, we saw it with MTD and we've seen it with other things, the system has just initially crashed out and they've had quite a number of technical bugs in there. So I would assume that you have to find the money to make your April payroll, and hopefully the money will come in. But I definitely would anticipate having that cash flow available, because I don't think there's any guarantee that you will receive that money. HMRC have said that a director of a company can be furloughed. If there's more than one director, then certainly one of the directors can very easily be furloughed, and there are no issues there. If you're a sole director, then you can be furloughed as long as you aren't doing anything revenue generating within your business and you are just fulfilling the statutory obligations of your company. Now, you need to be careful about what you're doing and what you're not doing if you're taking this route. And the route some people are taking is to appoint their accountants or advisors to take over the running of their business in the short term, so that if there is anything that needs to be done, they don't fall foul of the rules. Another option that people are taking is to have separate employment agreements and directors agreements with their companies, stating what the obligations are in either scenario. But it is a grey area, but there is some room to manoeuvre there. And I do think that directors, where they do have a salary going through the company and their business have ground to a halt, they should definitely look into claiming furlough support to help them.
So I spoke to the bank on the business interruption loan scheme, and I'm in two sectors, in hospitality as well as retail. So in the hospitality, they were very adverse to lending, saying that you have equity in your business, go down the traditional route. Whereas on the retail, where it's, we don't own properties, it's retail, they were more receptive to it. What they did say was, they made it quite clear that it's superseded now, but what was said at the time was that if you need the business, you need the loan, you need to put in all the reasons why you actually want the loan. So it's like applying for an overdraft, explain why you needed the loan. So you needed it for cash flow, you needed it to pay your rent, you needed to pay your suppliers, etc., etc. They wanted several years of your historic accounts, at least 2, if not 3. They wanted cash flow projections going forward, saying that this is what you needed it for. And the process is quite long to actually get it. It's not that simple. There are points in there, but it is available. And I think as time goes along, it's getting more clear as to what they want.
And could you just summarize quickly the key pieces of information? You touched on it there. that you needed to provide. So it was your statutory accounts, cash flows going out how far. If you could just quickly summarize what those key documents that you had to pull together were, that would be really helpful.
Sure. So they wanted 2 to 3 years annual accounts. They wanted management information right up to date. They wanted cash flow projections for the next 12 months. They wanted to know how COVID-19 was affecting our particular business. Any other assistance, what you already obtained, for example, the government rates grant, if you had any rent deferment or a holiday period from the landlords, if you had any other assistance from any other sources, they wanted to know everything. So they did want a lot of financial and forecasting, but those are the main points what they required.
Last Friday, the government announced 2 changes to the CBIL scheme. The first one is that no personal guarantees will now be required for loans under 250,000. The second update is that you no longer have to be eligible for a commercial loan. So before, you had to have tried to get a loan under normal commercial lending terms to be able to get the CBILS loan. This has now been completely removed. The banks are still inundated with requests, and they're requesting that anyone applying provides all the information together in one pack. And if you can use a broker or a registered advisor that can put this together for you, it will put you in better stead to get the loan. And they're also saying that they are focusing mainly on their own client base and their own customers, but they will move this out in due course to offer it to others that may not bank with them specifically, so people can leverage from other banks if their own bank is unable to offer it.
And could you just explain what you think the potential advantages and any risks there would be in using a mortgage broker to help secure this financing?
So I think that there are some brokers out there that are able to offer this and get to more lenders than you may be able to get to directly. I definitely think that using your own advisors to prepare some of the information will be of assistance, because the bank will take better account of the information being provided. Their focus is on your costs for the next 12 months. They're not really interested in what your income may be. They're interested in what your costs are and how you're going to cover them and how you're going to cover the loan repayments. I think the CBILS loan is a great initiative. It obviously replaces an initiative that already was in place, the enterprise scheme. However, the main things here are that the interest rates are good. There's a slight premium. It's not huge. There are no arrangement fees. So a broker, if you are using them, should be getting their fees directly from the bank. You shouldn't be paying that. And there is no early repayment penalty. So if you end up repaying the loan within the period that the government is paying your interest, there will be no cost to you of this loan.
Yes, I think that in some of the local authorities are being a little more supportive. In some of our businesses, we've seen approaching directly to local authorities for funding and grants outside of what's been highlighted by Farine. There are some providing up to 10 to 25,000 pounds. It's very local authority specific, I found out last night. And so if you are working outside of London or have businesses outside of London, it doesn't hurt to reach out to your local authority and ask the support they could provide. Some of them have specific funding available that was prior to this issue for supporting the high street, and they were providing funding for retail or other businesses that were providing a social impact. So depending on what business you're in, some local authorities have independent funding available.
And just to clarify how to access that, would you advise people to be calling, is it the rates department of their local council, or which would be the relevant department to be in touch with?
Yeah, so there's the rates department. There's also, some of them have set up support your high street type initiatives, and they're now widened their mandate around that. So depending on, there's nothing specific. So we've accessed it about 7 times across the UK, and all of them in different departments. So there's no specific, it'll be a little bit of legwork, but there is additional funding available, ranging from, like I said, 10,000 to about 25,000 pounds.
And Amin, given your presence in the retail space, could you give us an update on claiming those rates back? I know some of the councils are moving faster than others. Could you give us a quick update on how that's looking?
Sure. So from what I understand, we've been told not to approach the councils. This will be done automatically. So if you're a ratepayer, they'll go down the list. It's true, Kensington and Chelsea were the first to write to us saying that they asked us a question, are you open? And we said no. They then followed that by an email saying that, confirm these are your premises, and in due course they will send in the cash grant. That is up to £51,000 of rateable value. Westminster Council have also written, but nothing has, not as far as Kensington and Chelsea. I guess each borough will move at different speeds. So yes, from what I understand, it's an automatic system that will come in.